Some of the biggest names from corporate India also made their presence felt at the News 9 Global Summit. One of them was the group CEO and Managing Director of Mahindra Mahindra, Mr. Anish Shah, who spoke about the need for growth in the manufacturing sector, in India's manufacturing sector, to meet India's ambitious GDP targets, and how both the private sector and government investment needs to go in the right direction. Take a look at this.
I think the broader question has been, why is private capex fairly low so far? Because if you look at the last few years, it's essentially been government capex that's really driving the economic growth at this point in time. And there are multiple factors. We've gone through a time when there are a huge amount of uncertainties around the world. And suddenly when you feel things are back and stable again, something else happens. So that has resulted in companies pulling back to some extent. But if you look at certain pockets, we are still seeing significant growth. And I think we are poised at a point today where private capex will start taking off. And that will apply to agriculture as well as many other sectors, because we're starting to see capacity utilization hit certain levels where capex has to come in. And the India growth story is just amazingly strong right now. And that's going to essentially pull private capex in and have that grow much faster.
Right. So one of the big highlights of the budget this year was the fact that the finance minister projected only a 5.1% fiscal deficit, which in some way she was leaving room for industry to actually start borrowing, and the government doesn't crowd out industry from the market. So what are the sectors where you think we'll start seeing some investment happening fairly quickly? Because if you look at the government spending, it has actually been very aggressive. It's doubled in 3 to 4 years. So I think it's high time the private sector caught up with the government.
I would agree with that. We've in fact started. So at Mahindra, we have doubled capacity in our auto business. And we're going to put in even more capacity as we go forward. Our tractor capacity is up by 60%. And we're looking at tripling the capacity for our resorts in India. So this is just the start. There is a lot more investment that's coming in. And we're going to see a lot more growth across multiple sectors in India.
Right. But the reality remains, Mr. Shah, is that a lot of our workforce is still employed in the agriculture sector. And there's a huge underemployment, I would say, in agriculture. Incomes don't justify that sort of labor force. We need a long-term plan to move people out of agriculture into manufacturing and services. You're not just the MD of Mahindra and Mahindra, but you're also the president of FICCI. So what can the industry do to help with this transition, to move more workers out of agriculture into other industries?
So I think the vision has been very well outlined in the Prime Minister's Viksit Bharat agenda. Because to reach $30 trillion as an economy, and $17,250 from a per capita standpoint, manufacturing has to go from 18% to 25% of GDP. For that to happen, manufacturing has to go up 16 times in the next 23 years. 16 times. Right? And therefore, industry will have to play a significant role. And as industry sees growth across multiple sectors, that's where investment is going to come in. And therefore, I don't see that as really a challenge at this point in time, because it's going to be driven by the growth. The challenge for us will be to ensure inclusive growth. That's where you started with, to say, is there a divide, urban versus rural? And I don't think it's urban versus rural. It's among the richer segments of society versus the not so rich segments. And that's why inclusive growth is very important for us to drive.
Right. I think you couldn't, have hit the nail on the head better, because just 5% of the rich households drive almost 1/3 of the consumption in this country, which is, I think, very unique to India in some sense. There's obviously a need to broad base the consumer base itself, but I think that's a function of economic growth. And as we go from an economy which is at 2,300 per capita income to, let's say, about 5,400, 500 by, let's say, 2031, there are millions of new consumers who are going to come into the consumption fold. By some estimate, it'll be about 180 million. How do you think that's going to, change the dynamics of the market, and how is industry going to leverage that?
That's exactly what's going to change the dynamics, because it's not just going to 5,000, 5,500 by 31, but then, and this is the number I think that is the most amazing number for Viksit Bharat, which is 17,000 per capita income by 2047. That just means you're going to have a large number of people move into what we call middle class and upper middle as well. And that's going to fuel the growth from an economic standpoint. If we're talking about 7% growth right now, our sense is it's going to go to 8% next year and possibly even higher after that as you start seeing a much higher growth in per capita because that's what's going to be spent.